Now, the SPY, of course, is the ETF structure that mimics the S&P. And this is what we've had in the SPY. When we came downtown, the last time that was really heavy selling in the S&P was all the way back on November 21st. We hit a low, and that low was established at $74.34. We hit that low with 719 million shares. Heavy low, right? What do we do from there? We go from 79 all the way back up to 94. So it'd be 7,400 to 9,400. We come back downtown. As we come back downtown on the 27th of February, we broke that low. Now, that's called a false break to the downside. Why? Well, this is what you have. When you broke that low, you broke it with 470 million shares. So the correlation is 470 million shares versus 719. That's a normal occurrence in big downdrafts, folks. That's what you have. So that was on the 2nd of March. And, of course, the whole world figured, hell in a handbag, you're not going to ever come back. So the low there was $70.37. What happens? It gets stretched for 4 more days. It gets down to 67.10. But I'm sure those 4 days look like the end of the earth, because basically it did. Bottom line, nice bottom in, 490 million shares. Now, when you have a false breakdown sound, what has to happen is that, number one, to confirm it, is you have to get back inside the range. And the range being 74.34. Right now, it's at 84.96. So we not only got back inside the range, we got back inside the range, and what we have here is an ABC structure on the way up. Now, if you don't understand how these ABCs work, up or down, there's a couple different ways you can do it. You can get time in the trade over at our website at TFNN. The next webinar that I'm doing is on May 2nd. It's a 2-hour webinar. Only $89. All the details on the front page of TFNN. And then what we also have is we have the Master Trader Series. Next one coming up is Larry Pesavento and myself. We're going to be in New York City. Those details on the front page of TFNN. As we came off that low, what we have is this. We have an ABC structure up, and it's a confirmed structure. And the A to B is a monster A to B. The bottom of A, okay, is at a price point of 66. It's 67.10 to be exact. And that was on the 6th of March. You go nonstop up to a price point of 83.30. And the structure inside an ABC is this. Is you go A to B, you get volume on the way up. Now, what happens on the retracement? Now, watch this. This is really cool, folks. We hit highs out here of the 82.70 and the 83.30 with 422 million shares and 441 million shares. Now, as we back down and we retrace, what you have is this, and this is what's absolutely crucial to understand how these little structures go. When we back down, the first day that we back down with 322 million shares. So the correlation is 322 going against 441. Sweet. Second day we back down with 324. Nice correlation. 324, again, going against the 441. Now, in order to confirm an ABC structure on the way up or on the way down, what you have to do is that you have to take the B point out with volume as you're going from C to D. So what ends up happening is this. On the 2nd of April, the SPY came off that bottom of 77.96, went sideways for a couple more days, and then, boom, it goes from 81.12 up to a price point of 84.61. It closes at 83.43, which is over the peak of 83.30. It has volume of 476 million versus the B point of 422. Now, what does that set up? That sets up, folks, an ABC structure that will bring us into the 94 to 95 price point. Now, that's the bigger issue that's out there, and it's important to stay with the bigger issue. Probability-wise, when you take out a structure and you take it out with volume, it runs about 80, 85% that you're going to get the full ABC structure. So right now we're only at 85. You're talking about 95. You're talking about 1,000 points in the Dow. You're talking about 10 points in the S&P, 100 points in the S&P. You're talking about 10 points in the S&P SPY. Now, every time, we're doing this on a Thursday, and what we did have happen, now watch what happened just this past week. You have the high that was established at 84.61, 476 million. We pull back, and we pull back with 264 million. We pull back on Wednesday with 259 million. Thursday, you go sideways with 230 million. And what's happening on Friday is this. You had an acceleration up. We are trading at about the 85 price point. Now, the 85 price point puts you over the 84.61. And, of course, because what's going to end up happening, you're in a holiday week, you're going to have lighter volume. Now, does lighter volume matter? It always matters. The biggest structure, though, is already confirmed ABC up. So that you stay inside that structure. And all I suspect we're going to have here is that, you're at 84.61. It can close over this level. You'll see more volume come in next week. But you don't need more volume every single day. Why? Because you're already in a confirmed ABC structure up. So you're going to, if you're looking to get into these, certainly don't chase them. You want to buy pullbacks. That's how that's set up. Now, we're at 85, 95 is game, okay? So, once we get to 95, what does that mean? Well, what you want to be looking for is this. I'm going to bring this all the way back, and I'm going to speculate now where and what we are going to do. And the sad part in this is that when we get to 95, and the market's running at 9,500, of course, what's going to happen? Everyone's going to start buying back in again. And what I suspect we're going to see at that particular point is that that's when you'll see a heavy consolidation start to take place. Why? Because you have to build cause in order to get higher. And cause just drives people absolutely crazy. Okay? What cause is all about is that cause is basically shares that are going back and forth, consolidating, driving people up a wall. Now, watch how this can shake out, because this is a absolutely incredible setup. Now, this is pure speculation as we're doing this, but what you have is this. Well, speculation in the context that we're in the probability business. What you have is that once we get back up to the price point of the 95, what is happening is this, is that what you will see is that what we have established at that particular point is a monster. I mean a monster, head and shoulders bottom. Now, I don't speculate on head and shoulders bottoms, because if you go head and shoulders bottoms and or tops, they're all over the place. What you do want to do, however, though, is be aware of what we're setting up. Why? Because as long as when we get up to these price points of the 95 going into the 1,000, as long as we have decent volume at those price points, what you're going to see is a back and forth structure, and I expect that structure will actually, go on 6-7 months, just drive people nuts. If that's what we get, what you'll be able to identify is this: as we start hitting, higher levels, and as you hit the top of those channels, if you're hitting those top of those channels and you have volume that is coming in, well, you know what? That is telling you that the odds of breaking topside from that level are dramatic. And what you do have from that level is this: the way that you price out and speculate a price out from a head and shoulders bottom is that you're going to take basically the neckline, you're going to take the bottom of the head and shoulders, and in this case we're talking 66, 66, which is a big number, 67, and the top of it basically, which is going to be around 95 to 1,000, and you add that right on to the 95 to 1,000. Where do we go? Where does it go? It goes all the way back up to about 14,000. Now,